I'm going to be adding every currency pair on MT5 and picking 5 random ones to trade daily buyers and Fibonacci strategy on. And this said you did it, bro. I never traded that for my life and I was spamming sales, bro. Am I a madman at this point? Because this account is not my account, it is an investor account, and if I do it, I am cool. And I have to refund their money from my big account. So I must make this work. So this strategy involves 5 steps. Number 1, you want to mark the top of the range and you want to make it any color. You can make it yellow, you can make it green, you can make it orange, but just make sure you are marking the top of the range, which is the swing high, and then you are marking the low of the range, which is a swing low. So basically, not at the middle, not at the center, you want to make it at the top. And you see all these small daily candle here, these are the what we call the minor daily buyers. These are two, the purple candles, those are minor daily buyers, and the one that we marked, this top and this bottom, is what we call major daily buyers. And major daily buyers is actually not from the swing points, swing high and swing low. Instead, it is actually from the swing high and swing low from the biggest daily candle around the range. And you can see that that's the top range, that's the lower range. But now you don't want to make this top and bottom the range, you want to move it to the candle start and the candle finish point. And now this is what we call the major daily buyers candle, because in this whole range here, that candle is actually the biggest. So basically, this is the major high. And if you look at the daily candle that we mark, you can see that it was actually a purple candle, and the purple candle is actually the bearish candle. But because it is a bearish candle, does not really make your entry should be bearish also. So don't go and play your account thinking like this, because you still have to confirm it with structure and Fibonacci on lower time frame to really make sure we are actually in the right direction. And basically, since the candle is actually at the very low of the points, we cannot be using the major candle for entry. We have to use the minor candle, and we'll be getting to that. But basically, why we'll be using the minor candle is because the liquidity lower has been taken out. And this is actually the second step. You want to confirm if the liquidity lower has been taken out. Why? Because if price has taken out the lower liquidity, it has no reason to go down. So basically, you don't want to be caught in this. You want to make sure there is still another liquidity below, so the market can use this as an excuse to go lower, and that's the liquidity there. So basically, you want to mark the top of the liquidity, so edit it and change the color to whatever you want to keep it as, and then you click on save and make this your minor daily buyer. So basically, it's no longer a daily bias, it's actually a now buyer. So the daily bias influence candle direction, the liquidity influences where price is currently going now. So the now buyers for minor entries, the daily buyers for directional buyers. And then another way to be right is to make sure you are entering after a candle close. So when that first candle, bigger candle closes, you want to be entering your sell from that tip there. And likewise for that other one, you can see when all those small candles end, you want to enter at the tip of that point. And if you had already entered at the tip of that point, you would have caught that big candle there. Same with that smaller one. So basically, that's another way to apply something like the daily bias. But all the stuff you have learned from the beginning is literally nonsense, except your Fibonacci numbers aligned together. And this Fibonacci can be traded in two ways. You can trade it on the major daily buyers candle, or you can trade it on the minor now buyers candle. or range. And basically, before you start doing rubbish on your chart, you want to make sure you understand the numbers that you need to focus more on. So basically, you want to click on this stuff that look like a pencil there, and then scroll down a little bit, and if you see this point here, you can see that there are different numbers here, and basically all these other ones are literally garbage. You want to focus on these 3 points here, although I did not mark the top one, but these two that I mark are actually the most important one. But let's just see, this whole three stuff here is literally the main stuff you need to focus on. So basically, you want to keep those three numbers in your head, and what you want to do and how you want to plot it is that you want to either plot it on the major daily bias or the now bias. So for this example, I'm going to be plotting it on the now bias. So you want to take it from the top, and then you want to plot it to the low of the range. So let me just put that range back at where it is. So 0 stays at the top, while 100 stays at the lower range. Or let's just see where the red stuff ends. You can see that's the end of that red stuff, so you just adjust it there, and basically now you have a good Fibonacci strategy. And if you want to enter around the 23.6 and the 38.2, because this is actually the base numbers, or let's just call it a magic zone. Whenever you mark a range, a bias candle, and you enter at that point there, you are literally guaranteed at least 70 to 80% of the time that you are literally gonna make money. I can see that the drop just kept going and going and going, and this is actually the same way you want to apply it on the the bigger candle. So you still want to focus on this 23.6 on the bigger candle. It's also is the magic number for the bigger candle. You don't really need to change much, you just plot it like that. So basically, the bigger candles actually take more time to to drop. That's why I'm using the now bias to confirm it, and most people can target the low of this point, but me, I always like to get out ASAP. But this is just one pair, and this is nothing. This is literally not even up to anything that we are targeting. So I'm literally going to delete every single thing on this pair, and I'm going to start afresh. So now we're done with AUD JPY, and now I need a pair that I've never traded in my life. So I'm going to be going down, and basically I only trade gold USD pairs. So I'm not going to trade anything USD, I'm not going to trade anything gold or GBP, and even JPY pairs are out of the equation. So I need something I've never traded before, which is euro card. I've never traded euro, I've never traded card. So this is actually the best way to test if this strategy is actually what it says it is. Oh my, you can see that this one is different, bro. This one is different. Like, bro, if you make profit before, may you know if you make profits in future. So basically, you still have to be careful, and you need to know what you are doing, or else, bro, you go still blow your account last. So step 1, you need to mark the range. So I was starting with the lower range, and I feel like I'm going to leave it at this color. So basically, we just go with pink, and then at the top too, you want to mark the top, and basically that's the highest point, and this point here is the lowest point. So that's step 1. Now for step 2, you want to look for the biggest candle inside this range to verify if this is actually a daily bias. And basically, you can see that this buy candle here was a daily bias candle. Like, bro, that's the start No, I feel like that's not the start. That lower point is the start, and this year is actually the end. And basically, out of all the remaining steps, this is literally the most easiest part. This is actually the start. This is the end, and this does not really decide much. It just shows you the bias, and the bias already been fulfilled. You can see that after the daily bias candle showed us by, you can see that price still bought. So basically, the daily bias candle has done what it needs to do. Now we don't want to focus on the daily bias, we want to focus on the now bias. What is happening next, and what is going to decide that is the step 2, step 3, and step 4. So for step 2, you can see that there's still liquidity below. So basically, we still have unfinished business below, but this is just one confirmation. We kind of like need more confirmation, because you can't just be using only liquidity to decide that okay, yes, this is going to go down, like, because there's still more at the top here. There's still up liquidity. So basically, it's not the lower point that only have liquidity. There's still up liquidity that price can still go and fill. And even this point here, there is still liquidity here. So this liquidity does not really do much. So that's why we have more confidence. If you are using only daily bias and liquidity, you will blow your account. So now if you look at this point here, there is too much space below in that candle there, and that's literally gonna cause imbalance that price needs to go down to go and fill. So that's the third step, but that's not the main reason why I was selling. Like I said before, without Fibonacci strategy, this stuff is all useless. So basically, you can either use Fibonacci strategy on the daily bias range, which is this big range here, or you can get a minor now bias and set your stuff on it. But I've done an example of that, so I want to focus more on this major range entry. So basically, what's going to happen is that I'm going to be marking out this high of this range and this low of this range, and basically I'm going to be showing you that this major range also works, because in the last example I actually did it on the now range. So now we are in the major range, and you can see that's literally, that's it there on 23%, and basically it was literally perfect there. And you can see that I didn't mark it on the white candle, I actually marked it on the weekly candle there. That's basically the thing about the daily bias stuff. You can use the daily candle, or you can use the weekly candle to get your like your entry at that point in time. So basically, that was one of the reasons, or the 4 reasons, why I literally sold at that top here. You can see that the sale was literally lingering, and basically this was taking a while. So I was just playing around with this thing. I marked it at the start of the range there, and basically it was still at 23%. I marked the swing high, and basically it was still respecting 38%. But you don't want to be switching place that you've been marking for consistency. You want to stick to one thing. You want to be marking either the daily candle, or you want to be focused on the now bias, or you want to be focused on the weekly candle bias, or marking the weekly candle, so you have a good track record. But if you are switching between this top one and this lower one, those stuff is actually going to like shut your account in the long run. So now I'm just going to stick to this one here. I can see that the 23%, 23.6 is actually where current price is at, and it is still lingering there. So I'm going to have to wait for some time before it starts to drop. And basically, as you can see, we already got 100% profit with just this small entry here, which is insane. So now I'm going to be picking another one that I don't trade here because we still have a long way to go. And this NZD is looking nice, all this NZD, pair. I don't really trade them, so I'm going to go with NZD CHF. I've never traded this pair all my life, and you can see this one too. I was just hitting that sales, and basically this one was different. You can see different bars happening. So all pairs actually move different, but they follow the same structure. You mark the lower part of the daily candle, and then you mark the top. You can change it to any color because every pair literally have different personality. Not we want them, all of them they move differently. So basically now our daily bias candle is actually this purple candle here, and you can also use this white candle here for it, but I always like to use the before candle because it's actually much more fun. So that's the candle low, candle high. Then second step is that I want to go to lower time frame. So at this moment in time I'm on H4 time frame, and basically you can see that's the low and the high. The daily bias on H4 time frame is still the same candle with the daily bias on the daily time frame. Everything was literally the same height, and it actually shows that this setup is actually one of the most perfect setup. And even said there was actually a break of structure, which shows that price actually has intention to keep going lower, and there was no liquidity inside. Price just took out that sell side liquidity there, which is that break of structure, and then currently it is literally reversing. So that is actually a good time to confirm with Fibonacci strategy so that we can catch the pullback to target this lower point here. So basically I did a lot of error trying to get this Fibonacci stuff out, and basically if you mark the high and low, you can see that it was perfectly at 23.6. Literally that's literally where the whole pullback was literally happening from. This to show you how strong this strategy is. So for the first candle we had the minor daily or now bias, which was confirmed with liquidity highs. The second one was confirmed with displacement candle, which is that large strong candle that we saw that spiked up. Why this one was actually confirmed by a break of structure, literally a swing low sell side liquidity was taken out, and then that was literally what caused the pullback that literally caused the 23.6 points in our fib. So literally different pair, different liquidity confirmation. So if you can adapt and spot them, you will not be able to get set up. So basically combine every liquidity concept, and basically look for them on every pair, and you'll be able to make consistent profit like this. We're back again to the murderous pair. This one like this gold rand baba, this one they destroy people funds, bro, but we are going to go and destroy it today. So step one is the top and the bottom, and this is literally the deciding factor of everything. Then you want to go a step lower to confirm and look for the biggest candle around this range. So at the back there was nothing, so I just confirmed that this white candle here was actually the biggest one. So that's the top, that's the bottom, and this is not a bearish candle, this is actually a bullish candle. So basically this tells us that the daily bias for today is actually a buy daily buyers. So at this moment in time, you are not going to be looking for sales. Instead, you are going to be looking for buys at this moment in time. So you take your Fibonacci tool, and then you want to take the 0, put it at that 0 point of the line, and then take the 100 and put it at the 100 at the top there. And basically this is the next step, because why I did not look for liquidity in this mint and the likes of that was because when I went to this side, I did not see anything like that. So basically we are just gonna skip this step and we go to the third step, and basically you want to enter around the 23.6 or the 38.2 range, and you can see that price was literally at the middle of them. So I had to wait for it to get to like mainly that 23.6 before I start hitting this stuff here. And bro, you can see I was in red almost 10%, but boom, eventually it went up. And this is what you actually gain from trading Asian session. I knew that the finishing touch is going to be very hard, so I went to trade a very low session, which is Asian session, and that's why things were going smoothly. But the thing about Asian session is that there's a lot of consolidation, and any small supply demand, any small stuff like that, the market will reject from it because it does not have enough strength to just keep going up. So basically you just want to be going with the consolidation. That was why I entered this sell at this point in time. But assuming it was like New York session, I would have already held this trade to the top. But Asian session, the market is slow. It respects strategy, but it does not really go higher than 10 to 20 pips. That's why you need to know your session and time that you trade. You need to know the way it moves, study it, collect data like 1000 back tests. You should have it on your Google Drive, everything saved, how the market move, locked and loaded, and just stick to one session, or else you'll be distracted. If you are trading this session, this other session, based on how the spirit leads, you would not really go far. So it is actually back at that 26.2. So that was why I was entering this other buy at this moment in time, and basically it still went up. You can see that's the first one, this is the second one, and you can see that this one actually went higher than this other one, but this one made another position, which is that supply zone there. So you want to repeat the same thing, which is sell, because if I had not sell, this stuff is gonna like come down back, and there's a high probability that it's going to wipe out your profit and even wipe out your account. So basically you don't want to be greedy. Instead, you want to exit when you need to exit, and you want to go in when you need to go in. So basically at this point in time, I'm just really gonna close. You can see the rejection candle is already forming, so you don't want to waste time. Just close this up and then hit that sell again, so you'll be able to capitalize off this down move here. And boom, that's how I was able to get this result. So if you want to get similar result like this, comment flip, and I'll see you guys in my next video. Peace.